Thank you. I'll let you read these at your leisure going forward. My name is Toby Pierce. I'm the CEO of Tag Oil. I've been with the company just on 4 years now, and we've made a number of different strides in the last while. Most recently, we closed a sale of our New Zealand assets. We were a New Zealand explorer and producer. We have $41 million in the till after that. We have no obligations in New Zealand going forward, no capital, no abandonment liabilities. We're looking at different opportunities to proceed, a number of potential mergers and acquisitions, potentially even a straight corporate sale. And we have a normal course issuer bid outstanding at the moment. So, quick snapshot of TAG. We've got 85 million shares outstanding. We managed to retain a 2.5% gross overriding royalty across our entire former New Zealand portfolio. We have $41 million in cash, as I mentioned before. We also have assets in Australia, so 275,000 acres in Australia. We're in the midst of a farm-out process for that Australian asset package. The goal there is to be fully carried on those blocks. We also have milestone payments up to $4.5 million that will come over the next 3 to 4 years. The board itself, so myself, I'm a geologist and former research analyst. We have quite a well-known board. Many of you probably know Keith Hale, who spoke here earlier, part of the Lundin Group. Gavin Wilson, who's a fund manager for Meridian, a group of companies, and YF Finance. Together and on the board, management and the directors speak for 35% of the shares outstanding. So really good coverage on our shareholder base and very aligned with a go-forward strategy. So I want to touch on Australia in particular. This is our core focus at the moment. We are actively exploring. We shot seismic in 2017. It was processed last year on our PL17 block. We have 15 barrels a day of production. We see a lot of opportunity to expand that, but we're just getting ready for a bigger campaign. We'll batch our wells in a group. We picked up 2 blocks in the licensing round, about 250,000 acres in December. The key for these blocks is that they're both gas and oil prone. Lots of different types of structures on the acreage. So why did we focus on Queensland? Mainly the higher gas prices, the lack of oil, the underexplored eastern low with Strat Basin. We like Australia. It has similar hallmarks to New Zealand, although they are more pro-business than New Zealand is at the stage for oil and gas. Royalties are 10% with a 30% corporate tax rate. Very, very open for business. The DNRM is very amenable to helping companies move forward. And the gas prices alone make it worthwhile. Gas prices have averaged $8 to $12 a gigajoule or MMBTU, so a very robust pricing market. There's also lots of interest in Australia in general for gas. 2 big discoveries in the Perth Basin, 5,000 miles away, but have gotten the market quite excited about looking for oil and gas onshore. So this is the key reason. This is a Permian level seismic slice. Our 2 blocks to the south, ATP 2037 and 2038, sit across a fairly contiguous Permian structure that has all the hallmarks of the Cardium in Canada, so it's very similar to that. Several wells along that trend have tested gas, up to 2 million cubic feet per day, albeit with heavy mud and drilled in the 60s and 70s. So the plan is to go back in and test some of these structures. There's also oil potential up against the Mooney Field. The Mooney Field is the largest onshore oil field in Queensland, and it's produced 26 million barrels. So we see a couple oil structures there. Structures range. It's early days. We're about to shoot seismic this coming in 2020. So this summer, we hope to shoot about 150K line kilometers of seismic and 100 square kilometers of 3D. We anticipate that'll be fully carried by partners that have yet to be announced. But in that, we see a number of leads. We have over 10 leads, and they range from about 5 million barrels of oil recoverable up to 100 BCF. We obviously need to do more work, but it's quite a bit of potential there. Our main producing license, this has been producing now for since the mid 60s. We produced, the fields have produced about 300,000 barrels combined. There's about 5 million barrels in place, so there's lots of opportunity to continue. We've got a program coming up that will tackle that, and we've got a number of different targets, and off the 3D seismic, we can see the channel system quite nicely, so we'll get in there a little bit later this year. This just outlines exactly where we're going to be shooting our seismic in the various areas, and we have 100% equity at this stage, and we operate. So where does TAG sit today? With all of our cash, we're looking at opportunities. We actually trade below cash value, which is a bit of a head scratcher, but I guess it is part of the market. So we trade about $32 million market cap and have $41 million of cash in the bank at the moment. As I said before, we're looking to farm out our Australian assets. We're fairly far along in that process, and anticipate a fully carried program of up to 5 wells in seismic. We're looking at a number of different opportunities, ranging from corporate acquisitions to being taken over, and if we ultimately can't find something that works, a substantial dividend back to shareholders and a focus on Australia if we can't find somebody suitable to marry up with. So, why TAG Oil? Well, we're well positioned, good cash balances. We've got strategic holdings in Australia. We're in a very good position there, and anticipate that we'll have lots of opportunity to expand and add value going forward. We've got exposure to New Zealand still through our 5% gross overriding royalty, and we're out there looking for potential acquisitions. So, thank you very much. Please come see me at our booth 13 there if you want to talk further.